thank you very much, Naved, for having me here with the MSME founders who are going to create a 100 crore rupees will be a small amount, so 1,000 crore rupees business in near future. So I'm interacting with those people. So thank you very much for giving that opportunity for me to me. And apart from it, you mentioned a word called unicorn, which is there in US, where your valuation should be more than $1 billion, then you are called unicorn. So I have coined a new term for that, which is called Indicorn. This was given by a TV channel during the discussion, where they said that why to focus on 9,000 crore rupees valuation of a business. India has such potential where there are MSME, and they achieve turnover of 100 crore rupees with EBITDA positive. Rather than having a burning business model, we can have such thousands of businesses which create employment as well. So that's why for our new fund, we kept the fund name as Indicorn Angels, where we are focusing on such businesses which are profitable and have a potential to achieve 100 crore rupees turnover. So that is under the process of SEBI registration, and most probably within this month we will get the license and we will start that. Before that, I was running two funds, a Fluid Venture Fund, where we invested in 10 direct-to-consumer brand company known as Koparo Clean, Master Chow, Rusk Cake, and there are many more companies like Bamar. These are all our portfolio companies, and Real Time Angel Fund is a sector agnostic fund. So my entire experience, including my CA practices, to work closely with the large businesses and small businesses. So in the past, I have worked with Domino's, Microsoft, and other large corporates, as well as they were our client, and we have served them for their finance need. So once again, welcome you all. So today in this masterclass, we will try to learn how to well utilize your capital. So that is the topic which Wadhwani Foundation has suggested me, and this topic is very near to my heart because being a equity investor, we keep deliberating on the stage that what is the right right mix for the capital, because few investors are very pro to equity finance, and some people are not very particular about the equity finance. They always prefer debt financing. So in next few slides and in next 90 minutes, we will try to learn what are the best capital for us. So let me move to the slide. So I have distributed the time into these 7 major headings, where we will first try to understand that why growth create problem in cash flow, because everyone knows about the profitability part and everything, but how to manage the cash flow, that is a big problem. Then we will talk about the working capital as well, because there are different kinds of capital required by every business, and we will specifically deep down into the working capital requirement and how we can improve our cycle during the business. And then we will try to calculate that what is our expansion funding requirement, because this is a tricky situation for every business. They have to trade off between the expansion and the profitability part. So definitely profitability is there, but again, we need to calculate that how much fund really we require for the business. And then we will talk about the cash conversion cycle as well, and we will deliberate that how to improve that cycle as well. And then, as I mentioned, what are the financing options available in the market and how we should choose the right financing option. And then we will try to become investment ready, the bank finance ready as well. So we will deliberate and identify few documents which we should keep ready every time whenever we are going out for the financing in any form. And then we will do a small exercise as well. And during the session as well, we will do a small calculations, not very big. So please keep your Excel open. These are not very complicated calculation. In case you are not comfortable in formula, these are the basic sum and addition subtraction only. In that case, we can use calculator as well. So now let's understand with an example, very small example. I am not making it complicated at all. Take an example of Rajesh, who has a revenue of 2 crore rupees per year. Very simple. And one more suggestion, in case you have any query, feel free to write it in chat box. Whenever we will have a like 2 or 3 modules we will cover, I will be happy to take questions in between itself rather than going at the last, because the more we will make it interactive, it will be meaningful for all of us. So first example which we are taking of Mr. Rajesh, he has a revenue of 2 crore rupees annually, which is 15 lakh rupees approximately per month basis. He has a very good profit. Means he's making 10% profit on every sale. Now he has a customer who want to repeat the export order, and by this his sale will become double. So he's sure confirmed that if today the profit on his business is 20 lakh rupees per annum on 2 crore rupees sale, which is very healthy margin, in case the sale will be double, his profit will also be double. In that case, 20 lakh rupees will become 40 lakh rupees. So the mathematics look very simple, where if there will be double sale, he will make double of the profit. But the catch here is that in case he has to buy 2 times of the fabric which he is buying right now, he has to hire 8 new workers. He has to run the shift in he will have to manage the shift in 2 way. Means instead of 8 hours, he will have to run for 16 hours. So definitely there is an additional fund requirement which he requires. So take an example. If the buyer agrees that he will only pay after 60 days and the payment term is 60 days, while the supplier who is providing the raw material, he want a cash in 15 days itself. So there is a gap in conversion of cash cycle, then there will be always a gap and working capital requirement will be there. All of us know that whatever capital is required in the business where there is a timing difference. So in my own definition, I say that working capital is the capital which is required by the business for managing the timing difference only. So there are 2 types of capital required by the business. One is that where there is no timing difference, either it will be burnt out or it will create some revenue. Take an example of advertisement or any expenditure, salaries, etc., where you will do an expenditure while you are not clear whether it will be converted into the cash or not. While working capital is such where you have a inventory or the debtors on your asset side, and it will be converted into the cash, but the timing is required there. It may be 45 days, it can be 30 days, it can be 90 days as well. So in this example, the timing difference between these two is coming around 45 days, because buyer will pay in 60 days and supplier want cash in 15 days itself. So 45 days gap is there. And for the 3 months, he will have to pay salaries while there is no cash flow from the business because the buyer will pay in 60 days. So in a way, this looks like a profitable business opportunity. While let's try to understand that what is the cash in cycle. So take an example. Today is day 0 and he is paying wages on 30th day, and for the stock as well, he has to pay in 30 days. Then in 45 days, he will sell and dispatch to the buyer. So overall, finally, he will get in 105 days from the customer. So today is day 0. Take an example of 15th July. He has created the buy the raw material. 30 days is required to convert the raw material into the inventory, and then 45 days is required to collect from the debtors. So in a way, if you have to double your sale, you require 105 days of expenditure in your business pocket so that you can earn that money back. So today you will spend X rupees, 90 rupees in our previous example, to get 100 rupees, 105 days, which is coming around 3.5 months, that is required. And that is called working capital. So again, through this infographic, we can understand it better. So today your bank balance is nil, then you have bought raw material, and then it has been converted into the debtors, which is udhar in our cases, and then you will collect the business and it will become cash. It is called working capital cycle, where profit is there while cash is really not in the business. So this is called cash trap, where you will have to make sure that in case you can improve this cycle with a bit, you will be able to improve the returns on capital, and you will be able to earn better than whatever you are earning today. So let's try to understand few terminology here. First one is daily inventory cycle, where you will have to understand that how many days the stocks sit idle in your warehouse. So whenever you are doing a calculation along with your accountant, you should always ask that which are the inventory, what is the normal inventory turnaround time. So if you are buying inventory today, how much time it take to convert it into the sales? Then the second important cycle is that debtors cycle, where you will have to understand that how much time it take debtors to pay you. The more you will push to the debtors, the more better terms you will do with them. It will be better for your business. And then it is a minus will be the credit periods. The more credit periods you will get from the supplier, that will improve your cash cycle. So in this example, if your inventory days is 45 days, so you have created the inventory today and you are able to sell in 45 days, and debtors are paying in 60 days, it means that you require cash for 105 days. While supplier is also giving you 30 days payment terms, so 30 days will be deducted. So overall, whenever you are paying money to your creditors, you are able to receive that back in 75 days. That will call you cash cycles. So in this case, if your daily sale is 55,000 rupees, I have simply divided 2 crore rupees by 365 days. So it means you require 55 days per day basis. That is your cash stuck in the business. Even if you will reduce your cash cycle by 1 day, you will be able to save for 55,000 rupees per day. And in case your cash is stuck for 75 days, it will come around 41 lakh rupees. So it means your working capital requirement is 41 lakh rupees in this case, because that is going into the cycle. More you will grow your business, more capital will be required. So in the next slide, let's understand that as well. So take an example in, let's understand from here itself. So in this case, 41 lakh rupees is the requirement. Now let's understand how much this money will be required in your business. So let's do 5 minutes exercise, and let's do a calculation according to your business. You can take an assumption as well. It is not necessary that you keep the exact number. Approximately numbers are also okay. But based on that, we will calculate that what is the cash trap you have. And in case if you have any query about this cash cycle, we'll be happy to answer that as well. So let's try to fill the first step where I mentioned that you will have to calculate that how much time period it takes for you to convert the stock into the debtors. So there is a formula where what you will have to do, you will have to think about your business and will have to think that how much stock you have as on date. So take an example, if you have a stock of 45 lakh rupees in your store as on date, and then calculate that what is my average monthly purchase. So take an example, you are buying 30 lakh rupees worth of goods every month. So simply divide 30 lakh rupees with 45 days and multiplied it by 30. So it will come 45 days. It means that you are buying 1 lakh rupees worth of good every day, and it is taking around 45 days for the conversion. Another example is, take an example, you have a 15 lakh rupees stock in your warehouse as on date, and your monthly purchase is still 30 lakh rupees. It means that you are buying 1 lakh rupees while your churn or the conversion date days are 15 only. So it can be 15 as well, it can be 7 as well, it can be 90 days as well. So let's not go into the step 5 directly, because I believe this is the first time most of the founders do not like the finance at all, and they feel that it is the work of their accountant, while I always believe that as a promoter, this is the most important thing which we will have to learn. So let's try to answer the step 1 first. So if you can quickly write whatever is your answer for the stock days, that will really help me to understand that you are really listening to me.
Balaji is saying yes, and he is calculating, I guess. What about Srijit, Sudarshan, Mayur, Hanwant?
So great. Rajesh should feel happy because I take the name Rajesh randomly. I was not aware who are the audience. Take an example. And if the answer will be the same, which I mentioned in the slide one, that will be purely coincidence. So let's take the example of Sudarshan. So Sudarshan, in case your stock you are able to sell in 202 days, so definitely it is too high as per the industry norm. But definitely there can be different kind of a product which may take extra time as well. I'm not sure which business you are doing, but again, normally we as a chartered accountant always keep suggesting to our client as well that it should not be more than 90 months because we will have to rotate the inventory at least 4 times in a year. 202 means that we are able to rotate only twice in a year. So it is more than 6 months. But definitely we will go into the deep. Yeah.
Amit, can you just explain this DIO, DSO, and DPO? Like, what?
No, we will move ahead. Just let's focus on the DIO as on date, where I mentioned that we will have to calculate that what are the average number of days where stock sit idle in our warehouse. The formula of calculation is mentioned here, where what I am saying that in case you have a value stock in your warehouse worth 45 lakh rupees as on date, and you are buying on an average 30 lakh rupees worth of goods every month. So what you will have to do simply 45 lakh divided by 30 lakh multiplied by 30 because we have assumed 30 days in a month, not 31. So based on that, you will come to the number of days that how many days the stock sit idle in your warehouse. So that's what we are trying to do.
Okay, so DIO stands for.
And yeah, as of now, we are only focusing on DIO. We have not moved to the step two.
So DIO stands for the days inventory.
Days inventory out.
Inventory out. Okay.
Yeah. He wrote like in service business, will it be the same or?
No, it will not be the same because in service businesses, ideally it will be 30 days always. Typically, because in case of service business, manpower is your inventory. So you will have to pay salary on the 30th day of the business and at the max 7th of the next business. So there can be negative stock days as well. And in case you are into the service business, DIO is not applicable in your business. But sometimes how we calculate it, like for July month, if you have to pay salary on 7th August and you are able to bill to your customer on 1st of August for the entire month for the services you have provided. So your inventory days will be nil. So ideally, we should leave this part in case you are into the service business. But next step 2 will be important for you, debtors day, because that will help you to manage the cash flow. Sudarshan is very fast. He has calculated the step 3 and step 4 as well, which is good. So Abhishek, I am assuming that you have calculated DIO, which is 75 in your case. So I am assuming, okay, 96 days. Again, coming around 3 months time, which is on an average, according to the norms of the industry, most of the time, up to 90 days, it is okay. So now we have understood that more the stock will lying in our warehouse, the more working capital will be required. So if we can work on this from today itself and can identify some slow moving items from our business and can try to liquidate that will definitely help us to improve the working capital. But I am not saying that it is applicable on all the businesses, but typically we as a founder should do a deep dive and should understand that what are the items which we can liquidate fast. The more working capital you will get it back into the business, the more growth is possible in the business. So that is the beauty of the working capital. So now we have calculated the first part. It means that if your daily sale is coming around 50,000 rupees, I'm going back to my example where in my example, Rajesh required 55,000 rupees per day because of his cycle. So I am assuming that let's go with the same example where you require 55,000 rupees per day working capital. It means that in case your stock will be out in 96 days, you will require 55,000 multiplied by 96 days working capital requirement. So in case it will become 90 days, if it will become 75 days, definitely your working capital will reduce and you will be able to utilize that fund into some other growth plan. So if this is an estimate only, whatever answers you have given right now, make sure that whenever you are in your office next, sit with the accountant and try to find out the right number, that what is your DIO, because this is very critical for every business. And you must have seen that large businesses normally go for a summer sale, winter sale, every quarter sale to liquidate this inventory, which is slow moving, and they want to convert that inventory into the cash on faster mode so that they can utilize this into the alternate manner to grow the business. So now the step 2 is very simple because you have understood the stock days model. So now let's understand that in case you are raising an invoice on your customer on X day, how much time it takes you to pay. So it is purely depending upon your payment term with your debtors or your customer, that how much is time take. So take an example, you assume that how much outstanding you have in your business. Every businessman know that what is my current outstanding. So I am assuming that my current outstanding in the market today is 90 lakh rupees. And my monthly sale, which I can consider the last month sale, again, I will say that if it is 45 lakh rupees, so if I will divide 90 lakh rupees with 45 lakh rupees and multiply by 30, so it will come around 60 days. In a way, 90 divided by 45 multiplied by 30. So it will come 60 days. So that is my debtors day. I have calculated mine as a service business. So now you will have to calculate yours. So you will have to simply go and remember that what was your outstanding as on date, what is your monthly sale, and based on that, try to find out the number of days your money stuck in the debtors. Abhishek is saying 30 days. So I'm assuming that you have a 30 days payment terms with your debtor. So you have calculated. And my humble request is that not go with the payment terms, etc. Simply do a mathematics that what is the current outstanding, what is your monthly sale, and multiply it by 30. Because sometimes customers doesn't pay on time. Means we always assume that we get a payment on time, but there are always 10-20% customers who always delays. So accurate calculations will help you a lot to understand the working capital requirement. 48 days, 150 days, again, very high. 58 days, reasonable. So ideally, we assume that 45 days are the ideal. That is the best case scenario. Anything more than that, definitely you will require additional working capital. But it is fine. Even if it is 58 days today, there is always a chance to reduce it. And that's why this workshop is being organized so that we can work closely on that and can reduce it to 45 days. So now the step 3 is very simple for you. In the same way, you think about your liabilities as on date, that what is the liability and what was your last month expenditure or the monthly purchase you have done. And if you will divide it by then and multiply by 30, you will be able to identify that how much is the time period you get from your suppliers to pay. So let's now start the step 3, and I am expecting the answer for the credit days. Step 3 is 12. Okay. You are a good paying customer. You are paying well on time and advance. And this is a good practice as well. I also follow the same practice that there should not be many people who should chase us, but definitely try to do a negotiation with the supplier so that you can get additional credit period from them and can utilize that money for your growth. 41.5 days. Okay. So now we know where our money is. Now you can visualize this. So some of our working capital is there with the stock. We can visualize our warehouse and we can see how much money is stuck there. Second is debtors. We know that how much money is stuck with our customers, and we know that what is the payment terms we are getting from our creditors or from our suppliers. So now if we have to calculate our cash cycle, we will have to put the simple formula which is written over there. We will have to add stock days and debtors and have to reduce the creditor days. Whatever was your answer in step 1, step 2, step 3, add step 1 and step 2 and deduct step 3. Whatever is the answer coming, please mention in the chat box. 22.5 days. Okay. 219 days. So now for the step 5, I am giving you an option in case you are concerned about your actual sales number and you feel that it's confidential. For the sake of calculations only, you can take the assumption of any number. But what you will have to do now, you know that what is the overall cash cycle your business has. Now we will have to calculate the exact working capital requirement for our business. So simply what you will have to do, first of all, you will have to calculate the per day sale, which is very simple. In case you know that what was your turnover for the last year, you will have to divide it by 365 and you will get to know about your daily sale. And whatever number was your answer in the step 4, you will have to multiply that number with that. So take an example, if I had a sale of 3 crore 65 lakh rupees in the previous year, so 365 crore divided by 365 days, it will come 1 lakh sale per day. And in case your daily sale is 1 lakh rupees and your average CCC is coming 114 days, so 1 lakh rupees multiplied by 114 days, it will come around 1 crore 14 lakh rupees. That will be your working capital requirement. And in the subsequent slide, we will learn how the improvement of any single day, how it improve your IRR. So I'm expecting the answer for step 5. I'm assuming that it may be based on your own assumption as well. No need to mention the real number of your business. 43,726. So Abhishek, is it the daily sales number or is it the daily sales number multiplied by CCC? Because your CCC was 114 days. So I'm assuming that you have just mentioned about the daily sale only. So now we can see the working capital requirement 72,24,638. So that's saying 3 crore 26 lakh rupees. So definitely we have to work on the working capital requirement so that we can utilize that money into the growth of the company. 2 crore 23 lakh rupees. 9 crore rupees. So I believe we have learned the mathematics and we will implement this in our business. Tomorrow we will identify the right exact number and we will do the same with our accountant. So that's my request. So
Amit sir, if you can explain the logic behind this KPI, like why 30 days, why stock divided by monthly purchase, wow, how this whole KPI is working. I understand this is a formula.
Sure.
You can also explain the underneath idea of where this formula is coming from, or
Sure.
even benchmark numbers to any successful companies. What is the KPI, accepted KPIs? That will be very helpful.
Sure. So I believe I mentioned that, but let me repeat those things. First of all, we will have to understand that where our money is going. So when I mentioned about the working capital is something where it needs to be converted into the cash. The more we will convert into the cash, we will require less working capital. It means our cost of capital will be less and we will be able to utilize that money more efficiently and we will be able to create more money. So let me give you a single example and you can simply answer that. So take an example of my 2 portfolio company. First company is Coparo Clean, which is into the detergent manufacturing. And the second company is SK Perry, which is into the lifestyle product like laptop bags, luxury bags, etc. So let's take an example of first company where the items are very fast moving, less SKUs are required and there are no much slow moving item because detergent is something which people buy every month and there is no concept of the fashion or different SKUs, etc. So if they will manufacture any product and if I am taking an assumption that the stock will become debtor in 15 days. Take an example, today they manufacture X product and it will be definitely shipped to the customer in 15 days versus any laptop bag company where if they manufacture today, considering the various designs, selection by the customer, they ship in 30 days. So what do you think? Who require less working capital? Take an example, the base and sales price is almost same. Rajesh, would you like to answer that?
I'm a bit confused. I just got stuck with the numbers here.
Okay, so let's make it simple. So assume that there is company A where they manufacture something and able to sell in 15 days, while there is a company B where they whatever they manufacture, they are able to sell in 60 days. So it means the company A is doing 24 times sales, while the company B is only doing 12 times sales. So my question is that company A, where they are able to convert their inventory into the debtor within 15 days versus company B, where they require 30 days, who require less working capital?
Obviously, company A.
So that's why we did the step 1 to understand that out of 10 founders, out of you, who have the less stock days. So if you are keeping your inventory for lesser day in your warehouse, it means you are optimally utilizing your working capital. Otherwise, more the inventory will lie in your warehouse, you will require more working capital. So that's why we try to calculate that what is our stock days. So in any business, it can come 15 days, 7 days, 30 days, 200 days. So the more inventory will lie in your warehouse, you will require more working capital, and every capital come with a cost, which is called interest or the cost of capital. Correct? So in the first step, we try to find KPI for our business, and we try to understand that how many days we are using the money to keep it in our own stock, our warehouse itself, rather than the customer warehouse. The second step is that you have shipped to the customer, while customer is paying after 60 days or 90 days or 120 days. So in case you are getting money in 30 days and the second businessman is getting in 60 days, definitely in case you will get 30 days, you will be able to rotate the money 12 times in a year, versus the businessman B, he will be able to rotate the same money for the 6 times in a year. It means again, the businessman B will require double the capital of the businessman A. So that's why we did the step 2 to understand that how much time it takes to recover from the debtors, which is again an important metrics for every businessman. The third thing is exactly opposite of the debtors, where how much time we are getting from our vendor. In case we have a good vendor who is providing us 60 days payment terms, definitely we also have to pay late. So it means we will not require money to pay him immediately. There may be certain vendors or the employees where you will have to pay immediately. It means you are countdown start from today itself, while you will be able to recover money from your debtors from X days. Is this clear till now?
Yes, sir, it's pretty clear.
And in step 4, we have done nothing. We just added step 1 and step 2 and deducted step 3 to find out the exact days where our money is stuck somewhere, anywhere, maybe in stock, maybe in debtors, but we have reduced the creditors days to understand the exact days where which are required money to our bank or our inventory, while it is the non-productive days, means we are not getting any return on the capital, while that is being stuck in the inventory or the debtors. And based on the daily sales, if our average days cash to conversion cycle is 75 days and per day sale is 1 lakh rupees, it means we require 75 multiplied by 1 lakh, we require working capital of 75 lakh rupees. Now we have understood from this exercise how much working capital is required for my business. And in case I have to double this business, today the working capital requirement is 75 lakh rupees and I want to grow my business by double, then I require 1 crore 50 lakh, 1 crore 50 lakh rupees in case I will not do any correction in the business.
Right.
I hope this is clear to all.
Yeah, that's clear. That's clear, sir.
Perfect. So we have achieved the first calculation at least. And my last request was that do the exercise again and every month for next couple of months so that you can work out to improve the working capital requirement as well.
Yes, Amit sir. In this case, some consumable item might be there for stock by more than 365 days or 200 days also. So we have to calculate each and every stock days according to the
average. Average. Take an average. As I mentioned, you will have to take the numbers from your accountant and will have to see that what is our inventory. So accountant will tell, okay, inventory is 5,25,000 rupees as per balance sheet. So asking what was our last month sale. So simply calculate on the blended basis. As a founder, you can't go into the detail. Definitely, once you find out that the number is exceptional, you should ask for the SKU wise detail to understand what are the slow moving items so that you can take the corrective action. So that is the step 2. First of all, you should very clear that what is the working capital requirement for your business. So in the first module, what we try to understand that what is my working capital requirement? What if my business will grow 10x from here, how much working capital I will require? Because most of the businessmen stuck because they think here my business is profitable. Why I need money? Because on every sale I am making 20 rupees. While that is correct that you are making money, but that 20 rupees is if coming in 20 months, it means it is less than 1% per annum. And if to NBFC you are paying 16% interest and you are earning only 1%, means 12%, it means that indirectly you are making loss. So you should calculate your means notional interest or cost of capital on your own money itself, rather than thinking I am making money. It doesn't matter that how much was the cost of capital. So that's why this calculation is very important. Okay. So now the next part is we have already calculated, and in fact this is what I just explained. So in my example, Rajesh has additional order of 2 crore rupees. Now let's calculate if the answer is 75 days, which we calculated in the previous formula. And if we will divide 75 by 365, it will come around 20%. So which means that to earn extra sale of 2 crore rupees, he will require 41 lakh rupees additional, which is very simple. If the annual sale is 2 crore rupees and if his money will be stuck in 75 days, which is 20% of the entire year, it means he will require 41 lakh rupees on the first day. On 75 days, it will be released. Then again, it will be keep rotating. Second, day 2 will be released on 76th day. Day 3 will be released on 77th day. So it means to earn 2 crore rupees additional, Rajesh will have to put 41 lakh rupees into the business as a working capital. Is it clear? So in case your answer will come around 90 is almost 25% of the year, which means 3 months divided by 12 months. It means you will require 25% of 2 crore rupees. In case your answer is coming 90 days in the same example, the fund requirement will be 50 lakh rupees. In case your answer is 180 days, it means you will require 1 crore rupees to earn extra sale of 2 crore rupees. And then you will have to calculate that how much interest I will have to pay. And is it making any sense to earn that profit by this cost of capital? And additional thing which you will require to calculate when thinking about the growth of your company, that how much fixed capital I will require for the plant and machinery, building, etc. So in case there is a fixed capital as well, definitely the fixed capital is required for the long-term assets where the useful life of the assets is much more than the single year. You will have the exact funding requirement. So in this case, I have assumed that 41 lakh rupees is the required as a working capital, which will rotate into the business, while 24 lakh rupees, I have assumed that I will require additional plant and machinery. So overall, if I want to take that order, I should be very clear that I should have 65 lakh rupees in hand as on date. Unless and until I will have 65 lakh rupees, I should not take the order. I will not be able to serve the additional purchase order. And another point which you will agree with me. So in this case, the funding requirement is 65 lakh rupees for the additional 2 crore rupees sale. Now his next year sale will become 4 crore rupees. And the assumption in the previous slide was that he will earn 10% profit on that. It means that if he will put 65 lakh rupees into the business today, he will be able to recover 40 lakh rupees in the next year. Still, he will require additional 25 lakh rupees because he will be able to recover this money in 1 year, 9 months timeline. So we are assuming that 40 lakh rupees he will earn now. In the next 9 months, he will be able to earn 30 lakh rupees almost. Then only he will become cash positive. from balance sheet perspective or P&L perspective, he will become profitable as he will book the sale into his books, because the accounting is something which is on the accrued basis. Just like you book the sale, you can show profit immediately. Income tax takes the tax immediately. GST you will have to pay immediately. But cash flow is something which is entirely different from the books. On the plant and machinery, you will be able to claim only depreciation, while to recover that cash back, you will have to wait over 1 year, 9 months. So overall crux of this discussion was how to calculate your cash requirement so that you do not stuck in the cash trap. So now let's understand and divide our expenditure into the multiple parts. So I always say that there are two kind of expenditure in a business. One is, I called it as a risky investment, and the second one is working capital requirement. We have already deliberated and discussed about the working capital requirement, where we invest in the expenditure today and we cover it into the subsequent months or the subsequent year. While other expenditure are those where the outcome is not clear. I mentioned few examples like advertisement. You have put a hoarding somewhere, but you don't know whether it will really be converted into the sales or not. You hired two business salesmen, CBO or salesperson in your organization. You are not sure whether even after paying salary, they will be able to convert the sales or not. So there are certain costs where outcome is not clear. We called it as a risky capital. And mostly we suggest that for the risky expenditure, you should always look for equity financing. For the working capital, there are different kind of loans available. You should focus on the loan part. So whenever you are analyzing your business, you should always bifurcate expenditure into these two parts. So now let's try to learn together. In case you have a one-time expenditure, take an example, machinery, equipment, fit outs, vehicle. So definitely outcome is very clear that capex you will get one machinery where the useful life may be 5 years, 10 years. So definitely I believe that rather than diluting the equity, it should be funded through loan. So if I am taking a 10 laptops for my company, I will go for a loan option rather than going for a equity option, because you have a fixed asset and there is a resale value as well, and you can utilize it for the longer time. It is not a short term. So my suggestion for capex is that you should go for a term loan. For the setup cost like electricity, license, software, other things, again, my suggestion is that either you should do this expenditure from your own fund or maybe through the equity financing. So equity financing is the right kind of solution. But in case you feel that this is again, you have a purchase order and you have a sales confirmed against that, you can go for a loan as well. Risky one, hiring, training, marketing, samples, anything which comes under the additional sales. It can be branding activity as well. It can be marketing activity as well. Again, it should be done from the equity financing. Working capital, we will not spend time. We have already discussed about this. So it should be ideally funded through the bank loan or the invoice financing. In subsequent slide, we will understand the invoice financing as well. It is a kind of loan only, but it is a different form. There is a golden rule as well, which people say that whenever you have a long-term assets, don't take that from short-term money. Like CC limit or the OD limit is not good for the plant and machinery, and never utilize your working capital for your machine loans. So make sure that whenever you know that the useful life or the requirement of the particular asset is long, always go for a long-term loan rather than making a pressure on your cash flow to repay it back. So long term, always for long term, and short term should be short term so that you can well utilize your money. So now it's time for the next exercise. So we have understood about the working capital requirement. We have tried to calculate that as well, that what is the requirement as on date. And so now let's try that what is our funding requirement in the next 1 year. So in this exercise, we will continue with the same examples which you have calculated for your own business. Now let's understand that what are your target for the next year. Rajesh has a target to do additional sale of 2 crore rupees. So now you will have to assume that what is your target, and you will have to mention in A. And in Excel or paper, wherever you are doing, you can do that. So I'm taking a pause here so that you can write that number on your laptop. So whatever was your answer for the cash to conversion ratio. So in case your answer was, let's say, 90 in the previous slide, so calculate the percentage you require. So as I mentioned, that 90 divided by 365, it will come around 25%, because 90 days is 3 months, 365 days is 12 months. So simply you will have to divide 3 divided by 12. So it will come 12%. So either you can do in the days form as well, and you can do in month form as well. So if your answer was 90, you can simply divide 3 by 12, or in case your answer was 105, divide 105 by 365 days and calculate the percentage which is come.
Amit ji, I didn't get this thing, the B part.
Okay, so help me to understand what was your answer in the previous slide, previous exercise where we calculate cash to conversion ratio. In this case, what was your answer for the step 4?
CCC was 98.
90, exact 90?
98.
98. So divide 98 by 365. What is the answer?
Divided by 365 is 0.26.
Multiplied by 0.26, multiplied by 100.
Multiply by
100.
100. Okay. Understood.
So now your answer is 26%.
Yes, yes.
Now is this example where we calculated 26%. If your next target for next year is 1 crore rupees additional sale, so simply multiply 1 crore rupees with 26%. How much answer is coming for the C part? And you can take your own number, whatever is your target numbers. So simply we will have to multiply A with B. I hope you have done till now. So now let's understand the fixed cost requirement, maybe for the machinery or any security deposit you have to give for additional building or whatever you are thinking. So in case you have a capacity constraint in the existing plant and machinery or whatever way, in case you assume that there is a spare capacity, then the one-time cost will become zero if you are not manufacturing or working on the optimum capacity. In case you feel that this capacity will not be sufficient and you will require additional building and you will have to pay one-time deposit, you require machinery or any launch event, you will have to plan for that. So whatever you think that will be a one-time activity, put it into the D column. E is the sum of C and D. So let me repeat from A to E. First one is you will have to put the target for next 12 months in totality, not per month. It is in yearly basis. Then whatever was your CCC from the previous calculations, you will have to divide it by 365 days and you will be able to get the percentage, maybe 20%, 25%, or maybe 50% in case your cash conversion rate is 180 days. So based on the number of days you are utilizing the money into the stock and the debtors, this percentage will come. If your target for next year is 1 crore rupees and your answer from B is 25%, it means you will be able to rotate the money 4 times in a year. Your answer in C will be 25 lakh rupees. It means you will require additional 25 lakh rupees because this money will be converted into cash after 90 days. So you will be able to rotate 4 times in a year. So 25 lakh rupees for 1 crore rupees additional sale with an assumption of 90 days CCC. Now we will have to add one-time cost for our business as well, maybe for plant and machinery and for other thing. And then we will have to sum up C and D and our total funding requirement will come that you will have to put into the chat box. Perfect. So these are your working capital requirements. Means not working capital requirement, overall requirement. So in case you really want to achieve the number which you have mentioned in A, then you will require this additional capital. And now you should start thinking that what can be the potential source of this capital.
So this is an additional capital inclusive of or like exclusive of the exercise one capital what we read.
Yeah. This is the additional capital for the targeting the amount which you have mentioned in A. In case you have mentioned, you have thought that I have to do additional sale of 10 crore rupees, and if your turnaround days are 25 days, so definitely 2.5 crore rupees will come as a working capital requirement, and the plant and machinery is costing around 1 crore 50 lakh rupees, then you require 4 crore rupees to achieve that 10 crore rupees additional sale. So whatever we have calculated, this is for the additional sale. For existing business, you already have working capital, means that is running at its own.
Okay. So on the first exercise, I'm just trying to put my actual numbers.
Sure.
So that basically says that I need a working capital of somewhere around 3 crores. But as of now, if I just calculate all the stock values and the capital what we are revolving around somewhere around 1.6 crores.
Correct. So it means the 3 crore rupees already is in your business. You will have to go to the balance sheet and you will find that you have financed 3 crore rupees to the business either through your own capital or through the bank. So if your number are correct and answer is 3 crore only 3 crore rupees in the previous exercise, it means your business already have 3 crore rupees in the business.
Okay, I need to find that money then.
You will have to find that. Where is that? Maybe it may be GST input credit. It is lying with the government. Maybe it is somewhere in the deposit. So once you will analyze your balance sheet, you will find that number, or there may be incorrect calculation as well. In case we are assuming that the days whatever we have calculated is correct, then definitely 3 crore rupees is lying in the business as a capital. And now, whatever we have calculated, in case we are very clear about our growth plan, we will require this additional capital to achieve that number. Unless and until we will have this number, we will have this figure in our bank account, we will not be able to achieve that number. Either we will have to correct in our strategy where we can reduce the number which we have calculated in the first slide itself. So take an example, if you are getting your money in 108 days from your customer, if you will reduce that 75 days, you will not require as much capital as you have calculated now. Or maybe in case you are paying to your supplier in 15 days rather than paying in 15 days, if you will start paying in 30 days with a better negotiation and better discussion, then definitely again the requirement will be reduced. But this is the overall mathematics to calculate that how much working capital and the fixed capital require if in case you will have to grow your business. And most of the time business fails because they have an opportunity to grow, but they do not calculate the fund requirement accurately, and then they stuck. I have seen multiple cases. I will not name one of the portfolio company which is into the denim jeans product, where they always keep saying we have a demand but we don't have a working capital. Because they didn't calculated it very well in advance. They always thought ki customer will pay on 75th day, while the customers are always paying in 100 days or so. So that's why they are always struggling, because that money which could be utilized for the manufacturing, now that is stuck with the debtor. So the more discipline we will make in our business, more money we can make through the growth.
So as you mentioned, GST also being one of the biggest challenge, because as we buying goods, most of this money, imagine if you are holding a 2 crore rupees stock. So 18% of our money is sitting there in the GST. And frequently this money is getting repulsed. Always there is this 18% of the stock value what we hold is there in that particular account. And
Correct.
what can be done there?
Nothing can be done. We can just calculate it fast. And what if you will liquidate that inventory fast rather than selling it in 60 days? If you will start selling it in 15 days, so definitely you will be able to realize the GST portion as well from your customer faster.
Okay.
And in case of debtors, if I'm a chartered accountant, I raise an invoice on you for 1 lakh rupees and I've added GST on that. So I am supposed to get 1,18,000 rupees from you. What if rather than getting it in 30 days, I offer you 1% discount and take this money in the 7 days itself? So definitely I will be able to recover my GST input credit because you will pay me in cash 118 rupees while 18 rupees is already being gone to the government as my input credit. So definitely by doing small changes in the business, we can improve the working capital requirement. And that's what is the purpose of this calculation. The more we will calculate, the more we will sit with our accounting team. We will be able to do fine tune and we will be able to recover money faster.
Makes sense.
Even if you will get the money 1 day before your debtors, maybe sometimes what founders do, they take the money in a current account and then transfer it to the CC account. And I always advise, why don't we use the OD account itself to get the money in case it will directly hit to the bank account? You will be able to save the interest for at least 1 day. Means rather than every day calculating that how much money we have to transfer from here and there. So if they will get the credit in OD account, the interest will be reduced on the same day itself. So that's how we can do a small saving in the business, which will become very big once we will become big.
Yeah,
And
that
this
part we're doing. That part
and these are the disciplines only. It doesn't require much effort.
yeah.
So now we have calculated that how much money is required, and we will have to decide whether we want to put our own money or the banker. And now we are moving to the next part where we will discuss, and in fact, we have already discussed. So this is a kind of summarization only, whatever we have discussed. Like even if we will cut the CCC by 1 day in case of Mr. Rajesh, who is trying to achieve 2 crore rupees additional revenue, it means that he will be able to release 55,000 rupees from the running business. So even by cutting single days, if he will start selling 1 day before whenever he is selling, or he will start getting money from his debtor 1 day before by chasing him. So his 55,000 rupees will be released from the business. In case he will reduce it by 2 days, his working capital requirement will be reduced by 1,10,000 rupees. And you have now all the answers because you have applied it in your business. Now we have done that exercise, so you know that what I'm saying. So in this slide, I mentioned that if he will be able to cut 15 days in this different exercise, maybe 5 days improvement in the inventory, 5 days improvement in the debtors, and 5 days improvement in the creditors by taking additional credit period, he will be able to release 8,20,000 rupees from the existing business where he can utilize it for the growth business. And even if he will save 12% interest on this amount, he will be able to get additional 1 lakh rupees revenue, which is coming around 8-9% of that. So means it may be different for everyone and you may have a different opinion of that. But again, the ultimate purpose is to improve the debtors collection, do a fast sale, and get the better terms from the creditors. By doing these three activities, definitely we will be able to create additional working capital for our business and we can do additional sales. And in our terms, we normally say rotating money 12 times in a year is far better than rotating money 4 times in a year, because every sale bring you some profit. So goes by an example, if every sale bringing 10% of the gross margin for your business, if you will rotate the money 12 times in a year, on the same capital you can earn 120%, while the other businessman can earn 40% by rotating 4 times in a year. And in case you are rotating only twice in a year, definitely you are not into the right kind of business. You should think that what better can be done.
The logic is clear, sir, but I'm just getting confused with the terms. What CCC stands for?
For the simple terms, you can say cash conversion cycle.
Cash conversion cycle. Okay.
So you can mention this in your note, cash conversion cycle, because the day which we have assumed at day 0, on the day when you buy the raw material, your clock start. And the moment you get from your debtors or the customer, then only this clock stops. So the overall calculation is cash conversion cycle. Is this clear now?
Yes, yes. Thank you.
And I mentioned few examples as well. You must have seen that some large companies give the cash discount. So if you are paying them faster, so they give the discount. You can implement that into your business. Again, follow up automation, like rather than following up with your customer on manual basis, if you can create some automation in your company where the regular follow-ups can go and that can remind them that yes, I can pay. By improving the debtors collection, that can be an additional benefit. And there is one platform called TReDS where in case you have a large customer who have a certain threshold, then you can go to the government and they can discount your invoice and they can pay you in advance. And whenever that money comes, that NBFC can take from them. So we will talk about TReDS later, and you can do online search about as well on TReDS. But I will spend 5 minutes on that in the last slide. Again, if you know and you can plan your inventory in a better way rather than keeping or buying in a bulk, if you can cut it into the small manner where the stock to debtors ratio can be improved and you can get the money in 7 days, that can be additional strategy you can think of your business. But sometimes it is a minimum order quantity kind of situation as well, where you can't order less than a particular quantity, then you will have to decide. But in case you have a certain SKUs where you can try to cut it short and can have a better management of inventory, that will also reduce your working capital requirement. And again, the last thing which we discussed is the credit terms, where in case you can negotiate it better with that creditors, that will help you to improve the working capital. So now, again, this is a small exercise which you should do, and you should think that out of these 7 suggestions, if you can pick any 1 or 3 in this week, that will be really helpful for your business. So now try to take advance from your customer. What if you will ask your customer that if you will give me an advance, I will give you a discount? That will reduce your working capital requirement because you are getting money before dispatching. So try to do that. In case you are able to do that, that is fine. Otherwise, he will negotiate it that I will not pay, but try to take the advance. Second good practice which you have to implement in your organization from now onwards itself, ask your accounting team to dispatch the invoice on the same day when the shipment goes. So take an example, if you have shipped the product today to the customer, make sure that you also submit the invoice to the customer on the same day. Because of GST, technically you will have to prepare the invoice, but large corporate consider the invoice on the date where they receive, and they calculate the 45 days or 60 days from the invoice received rather than the invoice date. So make sure that you submit your invoice to the customer on time so that they can pay you on time. Every week, make sure that you sit with your accounting team for an hour, ask them to categorize the customer into the ABC category, where you put a threshold. Take an example, you can say any outstanding which is more than 10 lakh rupees, put them into the A category. Any outstanding more than 5 lakh rupees, put them into the B category. And any amount less than 5 lakh rupees outstanding, put them into the C category. And make sure that this sheet should be with you for the entire week on your table, and you should look at this on daily basis and keep reminding the A category customer, whosoever is the person 2 in your organization, he should focus on the B category customer, and accountant should regularly focus on the category 3 debtors. So category may change every month based on the outstanding, but make sure you focus on the large receivable so that you can get money faster. Then next point is start working on the discounting part. In case your customers are paying you in advance or the time or not asking for the payment terms, so try to give them 2 options, that this will be the amount that you will give a discount if you will pay without waiting for 45 days. So give 1% discount if they are paying you within 15 days. Take an example. Go to your warehouse, understand the slow moving items. In case there are certain items which are slow moving, liquidate that in this month itself. It will help you to create the additional working capital, and your interest cost will be reduced. Check about TReDS. So there are certain platforms like M1 Exchange is very famous. an Invoice Smart or RXIL, where government is saying that in case you have a known customer, you can put your invoice there. They will get it validated from your customer. These NBFC will immediately pay you and they will recover it from your customer. So that will improve your payment cycle. Again, I will not repeat that. Renegotiate credit terms with your 3 suppliers. So that is the homework which you should do in this week. Any question, any doubt about these 7 points?
Yes, sir. In TReDS, you mentioned MN Exchange and Invoice Smart. How it works means it does the creditors and debtors also have to register in the same platform.
Yeah. So first of all, government said that to a particular companies, I believe that threshold may be 500 crore or 100 crore. I don't remember. They will have to register there themselves. That is a mandatory requirement. Now, as a MSME or the small businessman, you can also register there as a vendor. So you can identify your customer's name there. And once you find that, you can submit an invoice against that. So take an example, your customer is Microsoft. And once you will be there on M1 Exchange, you will find Microsoft. So you submit your invoice. Microsoft will accept that on that platform that yes, I am liable to pay this amount, but I have to pay in 60 days payment terms. So I will pay this in 60 terms. So they immediately will calculate the interest part and will ask you, rather than paying 10 lakh rupees to you, we will pay you 9 lakh 80,000 rupees. Yeah, 9 lakh 85,000 rupees. Compare it with your OD interest rate, and even if the OD rates are equal, take that money so that you get this money immediately and can start utilizing it in some other purchase, because your audit limit has a sanction limit. You can't go beyond that. So now you have got 9 lakh 80,000 rupees additionally for your business and start utilizing it for the other production.
Okay. In I asked because in OEM the cycles are huge, 45, 60, 90 days. So it will be very useful for that.
Yeah. But you will have to first check whether your customers are there. Otherwise, you can request to your customer as well. They can be onboarded irrespective whether that is applicable or not. So you can convince them that in case I will get additional credit through this platform, because you have to pay after 45 days. I will get today itself. So I will be able to produce more for your business as well. So it cycle will rotate and it will be beneficial for your customer as well. So for certain customer, it is mandatory. Other customers can there as an option.
And it works in India only, right?
Yeah, it is purely for India, not for outside.
Okay.
Because outside India have a different methods. Means definitely government has nothing to do in the forum. Means they are never involved in the business. Clear?
Yeah.
Any other query from anyone? I hope these 7 points are very clear. Okay. So now we have achieved and concluded the first part of our entire exercise. We know the number, we know the growth potential, and we know the working capital requirement for our business. So now the next 25 minutes we will spend on the financing option. What are the options available with us? So these are the 6 instruments which we should evaluate for our business. Just now, like in the previous question, Srijit and I discussed about the invoice discounting or the TReDS platform. So now let's start with that only. So again, in case you have a invoice which you have raised on your customer and your customer is available on the TReDS platform, you should go there, should check. You should bid for that how much discount you can offer. NBFC will accept that. Based on that, you can take the money immediately in the next hour or next day. You will get the money and can utilize that money for your business. That NBFC will get the money from their your customer maybe in 45 days or 60 days, so whatever terms were agreed for you. So this is very good option for you to get invoice discounted through this platform. These are the government platform. Apart from it, there are multiple NBFCs as well where they do offline. So in case you know NBFC, you can deliberate with them as well in case you have a large chunk of invoices. But most of the NBFCs or this platform only work on those clients who are known and having a certain threshold, maybe turnover, I don't know. But definitely it will not work in case you are dealing with another MSME. They will not do invoice discounting for the MSME to MSME business. So largely it works only for the those business where the customers are large corporates. Next is bank term loan. We have already discussed, and the same thing. In case you require money for the longer term, for the plant and machinery or the fixed assets, then we should definitely go for the bank term loan. Typically, it comes between 9 to 12% because it falls under the business category loan. Here, you will have a fixed EMI every month you will have to pay. It is similar to taking home loan or the car loan for your personal purposes. Same way, they mortgage your fixed assets and will give you a loan for the fixed EMI and for the fixed period. So every month you will have to allocate that amount in your cash flow and will have to give that. This EMI will include interest portion as well and the capital portion as well. So your loan will reduce every month and you will have to pay interest as well. Cash credit and OD. It is very interesting proposition and I love this the most because in cash credit or OD, what is happening there is that whatever we have learned in the past slide, so it is a kind of financing your working capital requirement. So in case you have a stock, so they mortgage your stock and the debtors, and based on that, they give you a limit. So you can utilize that limit anytime. In case you will utilize it less, you will have to pay less interest, and in case you will utilize it fully, you will have to pay higher tax. So utilization is the key here, and that's why we have this session that your sanction limit may be 1 crore rupees, but what if you only utilize 10 lakh rupees out of that? So definitely you will have to pay 10 lakh interest on 10 lakh rupees only. So in EMI, you can't pay extra EMI immediately. It means that will be your ideal cash in your business. But in case you will start recovering from your debtors faster, your interest on the OD and CC will reduce. So definitely you will have to work towards that so that you can reduce the cost of capital. In case you will be able to reduce the cost of capital, it will improve your profit margin. So in case you are earning 10% today, even if you will improve your working capital by 2%, so you may be able to end up improving your profit margin on 2%. And in case you will have a 4 times rotation in a year, that 12 will become 48% margin on the capital, which was earlier 10 multiplied by 4, 40 only. So overall, even by 4 time rotation only, not 12 times, still you will be able to earn 8% more return on your capital. So that's why you should always work on the working capital, because most of the time fixed cost is not in your hand, because in case you require plant, that is requirement, you can't do anything. But more you will produce from that fixed capital, or more you will rotate that will improve your return. The next is CGTMSE-Backed loan, where the government guarantee up to 5 crore rupees for this is purely for the MSME business. Most of the times query come to me that is it easy to get? Answer is yes as well, no as well, because most of the bank ask for to create some history in their bank, then only they give this loan. So make sure that even if you don't require loan, start with 10 lakh, 20 lakh rupees sanction limit, so that the history can be created, your CIBIL report can be created there. So whenever you require this kind of loan, there should be some history, then only branch manager approves that. In case you will go afresh and ask them to give this loan, most of the branch manager do not entertain, because they don't have your any history or the CIBIL report. So that's why start creating this history in any bank from immediate effect. Last part is from the debt side, it is NBFC or the fintech. There are multiple startups in India which provide the working capital loan in a different way. So I'm taking one example, which is called revenue-based financing. So every fintech company try to find very interesting product, but you will have to understand that whenever you will go to the NBFC and fintech, any loan, whichever you will take, it will cost you at least 16% in a year, not less than that. So bank is always a better option than NBFC or the fintech. Fintech are there to earn more, and that's why they give the risky loan, but on the same side, they expect more interest rate on that. So I was talking about revenue-based financing, where there are multiple companies like Recker Club and other companies where they do not charge you a fixed rate of interest from you. So how they give the loan? They say, okay, I will give you 1 crore rupees loan to you, and based on your sale, I will calculate the EMI. So if you will perform well I will take extra money from you. So take an example, they will put a clause in the agreement that whatever will be your sale, the EMI will be equivalent to 5% of the sale or 5 lakh rupees, whichever is higher. So take an example, if your sale is 1 crore rupees per month, they will take 5 lakh rupees. In case your sale next month, it will be 1 crore 50 lakh rupees, they will take 7 lakh 50,000 rupees EMI. In case your sale will be 90 lakh rupees third month, they will take 5 lakh rupees again. They will not take 4 lakh 50,000 rupees because they have put a clause that 5 lakh rupees or 5% of the sale, whichever is higher. It means even if you will perform well, they will get their money faster, while they will not have to reduce the interest rate, because this work like a discounting model where they say that my EMI is fixed, interest rate already being calculated based on the 5 lakh rupees. Even if they have got additional 2 lakh 50,000 rupees in the second month, they will not give benefit to you because they have assumed that you will pay 5 lakh rupees every month. So make sure that whenever you are using different kind of product which are not very normal, read the clauses very carefully. I've seen multiple cases where in the clauses it was mentioned that the founder is personally responsible for paying these EMI, etc. So try to avoid the personal guarantee for the loan, because keep always your business separated from your personal identity. So taking loan from NBFC and fintech is very risky. From the close perspective or the practice perspective. But if you are taking, make sure you read all the clauses and be careful about the clauses and understand it very carefully. And the last part is equity financing, where you will have to add someone in your business as a partner. Equity financing means that you are giving your shares or the partnership. I always go for the equity financing. I have done more than 90 investment as a alternate investment fund where we invest in startup for the equity purposes. But I always explain the founder that you should always take this money for the risky expenditure where the outcome is not clear. This may be repeat for you as we have discussed in the previous slide. In case you are wanting money for the advertisement purpose, always go for a equity financing, never go for a working capital loan, because you don't know what will happen to that advertisement. In case you are hiring technical person in your organization or CTO and you are going to launch a mobile app, you don't know whether that mobile app will work as per your requirement or not. Go for the equity financing. In the same way, if you are going for a R&D, take an example, one of my friend is working in the recycle of the solar plants. So definitely in case he's doing R&D, that what will be the potential way to get the rare earth metal from that solar. So definitely he will go for a equity financing, because in case you will take working capital loan from the bank or the term loan from bank, you don't know when that R&D will complete and when you will be able to get the monetization or the commercialization of the project. So in case you are any project which is very grassroots level or early level and you don't know the outcome, so always go for the equity financing. It is better to give the partnership to someone rather than having a pressure on you. So equity financing is always for the risky proposition where outcome is not clear. Loan is always for that thing where the outcome is clear and the requirement is only for the timing difference. Is this clear? Because this is very important for everyone. So that's why I spent extra 2 minutes on this particular slide. Any question, any doubt related to these 6 options? I'm assuming no question. It is clear. So now let's try to summarize whatever we have learned till now. Or in case you feel that whatever I have written over here that is not right, feel free to unmute yourself and discuss with me. So for working capital, we have to go for the cash credit or the OD limit, CC limit or OD limit, we will have to apply to the bank. Never take term loan or personal guarantee or the personal loan for the working capital requirement. That is not the wise decision. So always go for the CC or OD limit. In case your cash is stuck with the large buyer, always go for a invoice discounting. TReDS is the best practice and don't borrow for that. because if your invoice can be discounted and you can get money faster, that is the best way to finance that. If there are big confirmed order and you can't do that, so go for a PO financing or short-term working capital loan and or request for the advance from the buyer. In case you have a fixed assets loan or the term loan, never divert that. Otherwise, you will stuck. You will get more PO, you will again stuck. So either go for the equity financing or for the loan from the bank. In case you have to set up a new machine, go for a term loan only. Never go for a working capital loan. Large risky leaps, like I mentioned about the new R&D, etc. So always go for a equity financing. And in case promoters have their own savings or the fund, you can utilize that as well. But taking debt for the large risky leap, never go for that. What are the government support available to the MSME? First one is you will have to do Udyam registration. How many of you have Udyam registration certificate in place as on date? If you can mention yes or no in the chat box. Perfect. So mostly have. So this is the must because most of the scheme drive by that. I have a different question. How many of you have trademark of your business? Okay, mostly yes, but there are no as well. So my humble request is to check with your lawyer and go for the trademark. In case you have a MSME registration, the fees for the trademark is half. You get 50% discount in case you are MSME. Normal fees is 9,000 rupees. And in case of MSME, it is 4,500. I strongly recommend that whatever is the name of your business, try to protect that through trademark because there may be possibility that someone else may use the same trade name in case you will not protect it through the trademark. So MSME is super important. Trademark is another thing on a side note where I recommend you to go for a trademark registration. Now, CGTMSE, we already discussed. You should discuss with your bank, irrespective whether you require or not. But you start discussing with your branch manager and ask what if you will require this loan maybe 6 months down the line, 12 months down the line, so that he can guide you and can navigate you in the right way. PM Mudra is a very small loan. I don't think that you will require that because there are lots of liability and it is for a very, very small business, not for us. Trades, we have already discussed. Check about your customer in case they are there. You should start doing that. And irrespective whether they are there or not, you should register yourself as a customer, as a vendor. Last point, which is very important in the section 43BH of Income Tax Act. In fact, in the new Income Tax Act, it must have been changed. I don't remember the new number. So there is a rule that in case the customer will not pay in 45 days to their MSME, they don't get the tax deduction. So every large corporate ask the vendor whether you are registered with MSME or not. So whenever you are chasing with them, sending an email, make sure to keep mentioning that you are MSME and legally also they will have to pay within 45 days. So in case you can put that as a pressure indirectly, not the direct one, that can help you to get the money faster. Now we should discuss about the negative things as well, where we should not do that. Funding, in case you are utilizing term loan in funding working capital, it means that even you have a lean period and your sale is less, still you will have to pay the EMI because in CC limit or OD limit, there is a limit only, there is no pressure to pay the EMI. So definitely you should not mix the working capital requirement with the term loan. You should not buy machinery from the credit card CC limit, sorry. Because in case your big order will come, your CC limit will stuck. So make sure to take the term loan for the capex and the CC limit for the OPEX or the working capital requirement. Never borrow to fund the losses. In case your unit economic is not such where you can have a profit, because in some business there is a gestation period as well, where in the beginning you will not get the profit while there is a potential to get profit in the subsequent month. So in that case, if your unit economy of the business is not such, you should not borrow the fund. You should always go for the equity financing in that case. Most of the businessmen, what they do, they apply the credit card for the official expenditure. Please avoid to do that. Always keep business separated from the owner. That will help you a lot. And just taking the full limit will not solve any purpose. In fact, it will reduce your CIBIL score, etc. So take the money on loan, whatever is required, rather than taking money for the entire. Now the important point is, but how bankers see your file whenever you go to the bank for the loan, how they look at it. So first of all, banker doesn't see your profit because they know that profit can be created in any way by doing the accounting. So they always see the cash flow statement. So whenever you will talk to the banker, they always see the cash flow position of your business. So make sure that your cash flow looks good in that case. Make sure that there should not be any check bounce case, no EMI should be overdue, because in case that is there, your account is being marked as a non-performing assets in RBI report. So credit discipline is important. In case you are taking a loan, you should pay it on time. Always they want to see that what is the debt versus equity ratio. So at least you should have skin in the game and make sure that enough capital is being put by the founders or the partners, so that the ratios between the debt and equity looks good. And they always prefer those companies who are very particular and paying their taxes on time. So make sure that your GST returns matching with your books and the books are matching with your income tax return. In case there is a mismatch in the different department sales number or the purchase number, they normally avoid giving the loan or they reduce the limit. So make sure that your return filing should be accurate and there should not be refiling as well. I've seen multiple cases where the founders keep revising the return, which doesn't give a right kind of comfort to the bank. So make sure that your return should be good. So you should start building this today itself rather than waiting when you will require funding. So last exercise which we should do in terms of the documentation. So I have bifurcated this slide into the two parts. Number one, if you are looking for a bank loan, and number two, if you are looking for a equity finance. So if you are looking for bank loan, make sure that you keep the Udyam certificate and KYC document of all the partners and the shareholders in a single file along with the constitution document. In case you are running a private limited company, then MOA, AOA will be your constitution documents. And in case you are running a partnership firm, your partnership deed will be your constitution documents. So make sure that you keep it in one folder. They will ask for the 2-3 year financials and the income tax return. Make sure that you keep it in the same folder. As I mentioned in the previous slide, that cash flow is very important for the bank. So bank statement should be there. Again, GST returns, because ultimately they will rely on the sales which is being reported to the GSTR, and it should match with your books of accounts as well. In case you have a past loan, make sure that to mention, keep the sanction letters and the track record of those loans as well. In case you have a purchase order or the agreement with the potential customer, keep the order book and the contract in the same file. And in case you have projection, keep the projection as well, because that projection will help branch manager to understand that how much fund is required, and based on that he will calculate whether how much loan can be sanctioned and which will be his limit as well, and which will be safe as well considering your business projection. So I hope bank loan file is clear. Now we should talk about the equity thing as well, which is my domain where we invest. So we always invest in the future potential of the company, because our method of giving fund is very different from the bank, because we always invest based on the IP. IP is intangible property, which means brand name, patent, and other intangible property which startups have or the business have. So we always look for those business projections where the growth should be 3 to 5x or maybe 10x kind of thing, not the 10-20% per annum basis. So we never invest in those companies where the growth potential is very traditional kind of thing. So we always look for a scalable business model. So that is the first thing. So your business plan should be such, we should reflect that. Second thing is that we we invest in loss-making profit. That is perfectly fine. But the unit economics should be positive, which means that in case we deduct the direct cost from the sales, it should be positive. It is fine if you are spending on the advertisement right now, you are creating something, you are working on R&D, but ultimately, in case the business is profitable at gross profit level itself, we don't invest in those companies. A third one is that we always prefer clean shareholding pattern rather than someone is saying that I have put my shares into my wife's name to get the government benefit, or I'm in job and my shares are in my father's name. So we never invest in those kind of company where the shareholding and the ownership is not aligned or the clear. And we always prefer those companies where they are very regular in the government compliances like ROC or GST, TDS, etc. Important point is that founder should be full-time into the business. It should not be like that he's there into the 5 businesses and telling us that whatever business you are liking, you can invest in that. So whenever we invest, we always see that founder should be full-time into the business where we are investing. And there should be next line of people as well along with him who are good, capable to run that business in case founder leave that organization later. So we always interview founders as well as next line of team as well. And we always see that where our fund will go, whether it will be core buying and how the founder can be value utilize our fund to grow it faster rather than keeping it idle in the bank FD or the bank account. So these are the important items which you should make. So now this is our crux of today's session, where number one activity is that we will have to know where we are. We have already discussed about it, that you will have to calculate the cash conversion cycle and the funding number, what funds we require. Then we will have to implement 3 things out of those 7 things immediately and try to implement all 7 things maybe next 1 month, where you try to do same day invoicing, follow up with your customer, improve the credit terms with your creditors and other stuff. Then build a folder whenever you require funding from the equity shareholders or equity investor or the bank. Try to start building both the files. And in the next quarter, you should try to meet 1 or 2 investors to understand that what they are looking for in the business. And in the same way, you should meet with a banker as well, so that in case there is any gap in your number, you can improve that in the next thing. And now I will request you that whenever you have time, maybe you can take another week. If you can calculate all the number accurately sitting with your accountant, and you can send it to the Vadavani Foundation, even if you want to submit it on no name basis, we'll be happy to check and we'll be happy to give my feedbacks on that particular thing. And in case there will be specific feedback on a particular kind of number, we'll be happy to give so that you can implement that, because this session was a generic for everyone so that you can understand the helicopter view of working capital and the fund requirement, but we can go deeper as well. And the wrap up for today's session is that growth consumes lots of cash. Every one of us calculated in the practice that it should not come like a surprise. You should be well aware of that, rather than thinking after taking the order. You should be well prepared that how much fund is required. Know your customer conversion cycle. It will create a good discipline for you so that you can track and can improve the CCC on daily basis. Additional working capital is required. That's fine. But in case you will be well aware of that, you can budget it very well in advance. Shrink your current cycle before you start borrowing. So make sure that even if you will reduce the cycle by 15 days, you can earn 1 lakh rupees in a year and reduce your interest cost itself. And the last part is revolving needs, revolving money. It means that more cycle you will use in the year, that will revolve the more money and it will be more returns. Whatever is the fixed assets you required, go for the term loan. In case you are looking for a big leap, so in terms of R&D and the advertisement, etc., or a big thing in your business, scalable business model, equity is the best partner for you. Thank you very much. And in case you have any question, we'll be happy to answer.
Yes, Navid sir, I want to say something. Yeah,
Yeah,
it was
please.
very fruitful cohort. This from Amit sir. Uh,
Mm.
it was enlightening, and as Amit sir told, it should not be surprised. MSME owners should not be surprised with your accounts. So that's good, and I will request you to please share this video of this recording so that
Sure.
our team member also has some deep insights.
Thank you very much for spending time on this.
Thank you. Thank you so much. Thanks. Thanks, everyone.